What's up, guys? It's Mr. Fit to Flourish. I guarantee you this is going to be the best stocks crash course that you will ever find on YouTube. Let's get right into it. Just a disclaimer, I'm not a financial advisor, I'm not an attorney, CPA, none of that stuff. This is for educational purposes only. With great power comes great responsibility, right? So don't use these powers for evil. So who am I? So my name is Dr. Luke, aka Mr. Fit to Flourish. You can find me on TikTok and YouTube, and I pretty much educate on stocks. I'm a pharmacist and I trade stocks and options, and I just want to share with everybody all the nitty gritty that I've learned along the way. So here's the truth. So 97% of retail participants lose money trading daily. Most people who trade are gambling, and 100% of the 97% losers aren't learning the skill, but rather looking for callouts and throwing away money. So you can't predict the stock market, is what everybody says. You can't predict it, but you can get pretty darn close. And that's not going to be you. It's not going to be you. Okay. So you say you can't beat the stock market. Well, what about Paul Tudor Jones, Dan Zenger, Richard Dennis, George Soros, which is the man who broke the Bank of England, Martin Schwartz, aka Buzzy. So say it with me. I have an abundance mindset. Okay. And there's no such thing as losing when you have patience, proper education, risk management, a skill, and like minded individuals around you that will bring you up with them. Also, L stands for lessons. They're never lost until you give up. So, who is this for? So, this is for growth minded individuals, those who are willing to invest in themselves, people who are mentally tough, positive mindsets, love extra income, looking to develop a skill, desire to be around like minded individuals, and disciplined and consistent. So, this video is not for you if you don't want to make any extra money, an extra 5 to 6 figures per year. You don't like to invest in yourself, you're weak minded, you don't like learning new skills, and you're bad with money and money management and have horrible credit, and you think that everything is a scam. This is not for you. Earnings disclaimer. So you're not just going to make an extra $1,000 per month or per week, even from home. But at first, I just wanted to learn how to invest. And now I'm earning anywhere from $600 to $3,700 daily trading stocks. And I'm connected with millionaires through 3 different masterminds and networks, growing and learning every day with a great group of people. And I'm no longer tied to just my 6 figure job, even though I love what I do. And I promise by the end of this video, the end of this webinar, if you will learn how to make an extra 5 to 6 figures every year. Wouldn't you be happy with that? So who do I work with? So I work with driven individuals. I've been a mentor in terms of pharmacy and in terms of the educational finance world, even though not a financial advisor. This is educational purposes only. Doctors, pharmacists, nurse managers, engineers, go-getters, long-term retail traders. I have 5 ebooks that are published. I also have a course, free course on YouTube as well, just like this one, but way lengthier in detail. And I have a private group with daily plays, massive trades, all that good stuff. And we have mastermind events planned for the near future. So just wanted to show a few examples of some people that I've worked with and pretty much transformed their trading. So one is Brandon. Brandon is a software engineer, and within 1 week of trading, he used to trade Forex, and within 1 week of trading, he went from $747 to $10,092. So transformed that trading through options. And then Cam's seeing consistent gains, 33%, 27% on a day-to-day basis. And then Chris, I actually taught Chris, he's a software engineer. He's been trading stocks for a while, but really didn't know how to trade options. And once I showed him how to trade options, he was able to make $30,000 on one play. So whenever I teach people, I feel like they go crazier than me because my average is nowhere near that high. But just an example of what you will be learning right now. And then a lot of my TikTok followers have almost given up on trading really until they found my page, and they've kind of thanked me and been like, oh, well, a lot of the education you put out is really helping me become profitable and learn how to trade the right way. And then here are some of my trades. Just wanted to share that with you guys and what my consistent profits are looking like. So let's get right into it. So what is a stock? So a stock is an equity or security measured in units called shares. And a share is like owning a ticket that represents ownership of a piece of a business. So owning a stock gives you the right to vote in shareholder meetings, voting on things you want to see, and you get a say in the direction of the company you support. For example, I'm a part owner of Apple because I bought 200,000 shares. And so a stock exchange or a stock market is a physical or digital place where investors buy and sell stock or shares in publicly traded companies. The market is open Monday through Friday, 9:30 a.m. to 4 p.m. Eastern Standard Time. So what is a stock? You probably want to simplify it, right? So I typically describe stocks as tickets. And I use a lemonade stand as an example of a company. So you are the owner of a lemonade stand, but as the owner, you don't have the money to buy the supplies that you need to sell. So you get some investors to buy tickets that in effect grants them as part owners in your company. Using the money raised from selling tickets, you then buy and sell the lemonade and the supplies. You get all that good stuff to run your company. The more tickets the investors have, the more control they have in terms of ownership of your lemonade stand. Make sense? So if they bought tickets at 50 cents each and your lemonade stand starts popping, okay, your lemonade brings all the people to the yard, right? So now the tickets may be worth $2.50 since you're making a lot of money. Now the investors just made $2 for every ticket that they bought. So now they're making money because your company, your lemonade stand, is worth a lot of money as it's bringing money in. Now, there's two different ways to analyze stocks and to decide what companies to invest in or to trade. And the two ways are technical and fundamental analysis. But technical analysis is using price data and volume data from charts to analyze a stock. It gives you insight into the future price action. And a lot of the times, you draw lines, you use indicators, and you use charts that tell you when to buy and sell securities. Fundamental analysis is determining the intrinsic or fair value of a stock based on the stock's industry, economics, and also profitability. So analyzing a company's financial data to make decisions about participating in the marketplace is fundamental analysis. It tells you what to buy, and also you can look at the qualitative side, which is how well known the company is, like Nike or Apple, and then the quantitative side, which shows you the assets, liabilities, revenue, earnings, cash flow, and PE ratio. Now, there's different trading styles, like I mentioned earlier. So there's investing, which is a long-term strategy in which someone puts money at risk to get a return. And then there's something similar to investing that's called position trading, when you buy and sell large portions of a security for and hold it for quite a while, from anywhere from months and months to years. And then there's swing trading, which is buying and selling securities after holding a position for 2 or more days. Day trading, where you buy and sell a security within 1 day, which is very popular nowadays. And then there's scalping, which is where you trade within minutes, often multiple times a day. So all this trading stuff, where do you trade? So where do you place trades? So most people place trades on Robinhood and Webull. A lot of retail traders do, but these are all different types of places you can go. And then there's also paper trading. So if you don't have any money, you can just practice, treat it like a video game and paper trade. So that's using fake money to put on trades, and you can really learn a lot this way. So if you want to trade, we're going to get into technical analysis, which is the key part in learning trading. So how do you read the charts? So up or down, this talks about the market sentiment. So how the market, the overall mood of the market, how is the average trader feeling, like buying or selling? Sentiment can also be described as the market or people being or feeling bullish or bearish. So what are these terms? So the terms mean bulls. Bulls, it means optimism. It means that you think the stock is going to go up and the economy is expanding. Now, what is a bear? A bear means stocks are going to go down, economy is contracting, and it's usually followed by pessimism. So these terms are used to describe when the market is going up or down. Buying and selling. So when people are buying, it's usually you say that they're going long, and when people are selling, you usually say that they are going short. The bid is the price a person is willing to pay for something, and then the ask is the price a person is willing to sell the security for. The bid-ask spread is the difference between the two. So volume refers to the amount of shares being traded on a day-to-day basis. If we're looking at options, then we're looking at contracts. So volume kind of tells you how many times the security is changing hands. A rule of thumb is to stay away from trading stocks with volumes less than 1 million a day. Now, what does a chart look like? So this is an example of a Japanese candlesticks chart. Japanese candlesticks were created back in 1790 in the late 18th century from a Japanese rice trader. So the rice trader saw that there were pretty much patterns in how rice was trading every single day. So he started drawing it on a chart. And on this chart, it helped him go from a little bit of money to $100 million in today's money in terms of capital. So then the Western world picked up these Japanese charts in the early 20th century. So candlesticks, how do we describe candlesticks? So the green means that price is moving up, red means the price is moving down. So over here at the bottom of the green is the open. So we're looking at different time frames. So in a 5-minute time period or a 10-minute time period, whatever time period you're looking at, that bottom part of the green candle shows you where price opened at. Where did price start? And then the top flat part of that bar shows us where price finished, the close. And then in between that time period, the highest point that was reached, the highest price that was reached in that time period is marked by this top part. The skinny parts are called the wicks, and then the middle parts are called the body. And then the lowest portion, the lowest part, the low, is the lowest price that was reached during that time frame. Now, if we look at the red bar, it's just the opposite. So the open starts at the top, and then the close, so where price finished at in that time period, is at the bottom. Again, the middle part is called the body, and the skinny tails are called wicks. Candlesticks are formed and used to measure prices or trades in given time periods. Green means buying, red means selling. So then we need to know trends. So an uptrend is bullish, and this is where we're getting higher highs and higher lows. The chart is generally going up from left to right. Downtrends are bearish, and we're getting lower highs and lower lows. The chart is going down from left to right. And then there's a major concept a lot of people do not talk about, and it's called trend versus non-trend bars. So trend bars are bars that contribute to the direction of the trend. So they're typically massive bars, and they have bodies that are 50% or more of the entire bar, end to end. And they help decide where to enter trade. So if you see a big green bar, then it's a trend bar, and that means there's a lot of pressure to the upside, a lot of buying pressure. If it's a big red bar, then it means there's a lot of selling pressure. Non-trend bars are usually small bars or dojis that are very small in size, and they don't give you any idea of where the trend is going. They're just really small, and they don't contribute to an up or down movement. They usually cause price to go sideways. Here's an example of trend and non-trend bars. In the circles, we have non-trend bars, and then the arrows are pointing to massive trend bars that contribute to the direction of the trend. Now, we need to talk about patterns. So what are a few patterns that can tell us where price is going? Well, we have a cup and handle formation. After we have a cup and handle form, we typically get a massive move to the upside. Flags are patterns where we have a movement one way, we consolidate, and then continue. Pennants look the same as well. Here are some other patterns that you need to be studying in order to understand where price can potentially go. And then these are patterns that are causing potential direction to the upside. And these are the names of the bars at the bottom that will cause that potential direction. So here's an inverse hammer causing price to go up. This happens at the bottom of a downtrend. Bullish engulfing also happens after price moves all the way down. It's at the bottom of a downtrend. Piercing line at the bottom of a downtrend, meaning price is going to go up. Morning star at the bottom of a downtrend, meaning price is going to start to go up. And then three white soldiers after the downtrend finishes, and we get these three green bars moving up, causing price to go up. And then we have bearish signals, so signs that a price is going to start to go down. So after a move to the upside, after an uptrend, we get a hanging man doji here. Here we get a shooting star doji, bearish engulfing, and evening star doji. And then we have double tops. So double tops are a sign of a reversal. It typically means that we went to a price before that was too high, and then we sold off, and then we tested that high again, and this time we didn't pass that price again, and we just sell off. Now we also have down up bars and up down bars, which are signs of reversals as well. And it's when we hit price, and it's called a micro double bottom or a micro double top when the bars are right next to each other. And these are good signs of a reversal in price. So key levels, what are key levels? Key levels are areas of support or resistance from past price action, and it's typically hit multiple times on different time frames. So levels are essentially just highs and lows, peaks and troughs, and they can also be resistance or support, previous days highs and lows, previous days closes, today's open, monthly highs or lows, and moving averages. So looking at this chart here, this clean chart, what are some key levels, resistance and support levels? And I drew a ton of lines that can kind of show you examples of where you would consider key levels or support and resistance areas that we tend to hit and not go past. So what is support and resistance? So resistance is an area where price does not go above, and support is a price where an area on the chart where price does not go below, and it's a definite point. Supply and demand is pretty similar, but supply zone is a zone, so it's an area on the chart, so it's between 2 points, pretty much a general area where sellers are stepping in and causing price to go down. A demand zone is a general area where buyers are stepping in and causing price to go up. What is a doji? So a doji is a trading session where the open and the close price are the same or small in difference. And we also have trends or trend channels. So a trend channel to the left is a downtrend channel, and you draw a downtrend line on top of the downtrend, and the channel line is going to be on the opposite side. So a trend channel has to contain both the highs and the lows of a trading range, and it's the opposite for an uptrend. So you have the channel line on the top of the uptrend, and then you have the trend line at the bottom of the uptrend channel. What is a pullback? A pullback is basically a move in the opposite direction of the trend that is typically just really short-lived, and then you get a continuation. So consolidation is a trading range within a price range, or trading within a price range, and a correction is a fall of 10% or more from recent highs. To understand how to trade or to make good predictions with technical analysis, you need to use indicators. Here are some indicators to use. So many indicators are just more noise to make you freeze while trading, but here are some indicators that actually work. So Saudi ATRs, which are average true ranges, EMAs, which is the exponential moving average, and then VWAP, which is the volume weighted average price. Other indicators to take a look at are listed below as well. So the different types of indicators are leading and lagging. So some leading indicators are oscillators, so the MACD or RSI. Lagging indicators are overlays, so moving averages, Bollinger Bands. Others are average volatility and price range type indicators like ATRs and ADRs. They give you an idea of how much a stock moves on a daily basis, the average range that a stock moves. So what is the MACD? MACD is a moving average convergence divergence, and is calculated by subtracting the 26 period exponential moving average from the 12 period exponential moving average. So the MACD and the RSI, the relative strength index, they're pretty much momentum oscillators, and they tell you when a stock is overbought or oversold. EMAs are lagging indicators. They're exponential moving averages, and they're calculated by adding the closing price of the last X amount of bars divided by the X amount of bars, and that gives you a moving average price. Here's an example of the 20 EMA, and the blue line is the 200 EMA. The yellow line is the 20. Now, when we talk about stocks, a lot of people trade options. So what is an option? An option is simply like buying insurance on a stock, and it gives you the right to buy or sell a stock at a predetermined future date. Well, what does all that mean? Really, there's only two types of options. So you buy these options, and it's called call options and put options. A call option is a bet that the stock is going to go up, and a put option is a bet that the stock is going to go down. Buying options gives you control over 100 shares of a stock. So you'll see the price listed as 0.13, but you use a multiplier of 100 to see the actual price that you're paying for that block of a contract. So the premium would be $13. And the reason that people buy options, and the reason I trade options as well, is because it gives you leverage. Leverage is basically putting a small amount in and getting a lot out. Typically, you'll see stocks trading around $500, and maybe you might not be able to afford that share for just $500. So you might buy options, so you'll be able to get anywhere from 10 to 20 contracts on an option at $500. And instead of just getting a $1 move, so if the stock goes from 500 to 501, the contracts typically move up exponentially from a $1 move. So you might pay $500 for a contract on an option, and that $500 can go to $1,000 for that same $1 move on the underlying asset, the equity, the share, the stock. So that's why a lot of people like to trade options. Here's an example of some chart analysis. So major concepts that we use to make hundreds to thousands of dollars every day here are listed. So I made videos like this in the past, and a lot of people have asked me to join me and to kind of be mentored by me. So I wanted to give you guys that opportunity. So what you're going to get is you're going to get 5 ebooks on classified trading techniques used on Wall Street for a total value of $197. Not only that, but you'll get 5 ebooks on classified trading techniques for $197, and you'll get access to the First Team Investing Network for $2,749. And that's daily stock picks, option picks, networking with like-minded individuals, access to mastermind events for a total value of $2,946. Not only that, but you'll also get 5 ebooks on classified trading techniques used on Wall Street for $197. You'll get access to the First Team Investing Network group, $2,749. Networking, daily stock picks, access to the mastermind events, live chart review every single day, $2,497 value. All of this, $5,443 value. Not only that, but you'll get the 5 ebooks on classified trading techniques used on Wall Street. You'll get the access to the First Team Investing. You'll get the live chart review, and you'll get unlimited access to videos, webinars on real estate, starting your own business, etc., etc. $6,440 value. It doesn't end there. Not only that, but you'll get the 5 ebooks on classified trading techniques used on Wall Street. You'll get access to the First Team Discord network. You get live chart review every day, unlimited access to videos, webinars on real estate, starting your own business, personal development, and you get to watch us trade live daily. All of that for $9,600. Now, obviously, I'm not going to charge you guys $9,637. Now, I definitely think it's worth it, and I wish I found someone doing this sort of thing a while ago while I was getting started, because I would be ecstatic. Because I'm at a point in life where I understand that knowledge is power, and I now understand that financial literacy is even more crucial. I think it's worth it, but I'm not going to charge you guys that. But I need to ask you guys a question. So, what if all this did was get you started making money in stock investments today, $1 in, $3 out? Would it be worth it? What if all this did was make you break even in the first 2 weeks for what you paid and nothing else? Would it be worth it? What if all this did was make you an extra 4 figures, so an extra $2,000 to go shopping? Would it be worth it? What if all it did was give you the necessary knowledge to have a 5 to 6 figure side hustle for life while keeping your regular job? Would it be worth it? What if all this did was give you a full-time investor as a resource when needed and like-minded individuals around you? Like, wouldn't you want that? Would that be worth it? So for less than 20% of that total value, less than a Big Mac a day, you have the ability to really change the rest of your life alongside someone and a team pretty much who is extremely passionate about changing their lives. So we don't want to see you in 5 years in the same job, doing the same thing with the same people, driving the same car. Because I know I won't be, and I know I'm not anymore. I'll probably be flexing on social media with my group because we worked hard for it and got to succeed together. So this is the plan here. Basically, $97 a month, like I said, less than a Big Mac a day, or just a one-time payment of $749 to join the Discord and to get to make a ton of money and have lasting memories and a skill that will last a lifetime. So the only question left is, do you think you have what it takes to join the team? If not, that's fine. We drop a ton of resources on our TikTok. We drop a ton of things on YouTube, a ton of free value and knowledge on financial literacy, as well as the growth mindset. Thanks for tuning in to the Fit to Flourish podcast. I hope you guys have a great day. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance,